Welcome to this edition of the Living in the Denver Suburbs March Market Update. We are going to talk all about the real estate market. Inventory seems to be creeping up. Affordability seems to be creeping down. So we have ourselves quite the interesting market that I want to dive into in this month's edition. What's up, guys? Jeremy Kane, Living in the Denver Suburbs and eXp Realty with another market update. I do these every single month in order to keep you informed. So if you like what you hear, you don't want to hear all the noise and all the other stuff. You just are the analytical stats person. We bring some stats. We talk about what they mean to you as the consumer, and we dive deep. Every single month, about the middle of the month, you will see one of these pop up on my YouTube channel. So if you like that, subscribe, stay in touch. Please comment, ask any questions, as that's what I'm here for, to be a resource to you, the community, to give you the true and real data as it pertains to you in the real estate market. So early on in this month, January, February, we're almost at the end of March. We've had kind of a tale of 2 months. In January, consumer confidence was up. Mortgage applications were up almost 24%. The interest rate had, tailed off, and people were rushing to the market after the holidays and all of that. So we had a 24% increase. We're looking good. We had a lot of buyers. We still didn't have a ton of inventory because if you remember, we lost a ton of listings on that December 31st expiration date. And so we didn't have a ton of inventory, but we had a ton of influx into the market. Mortgage applications were up 24%. Well, in February, they fell 11%. As the interest rates kind of creeped up, the market realized that the Fed was not going to drop the Fed rate as quickly or as many times as they thought. And so the market has had a pullback. Now we're kind of in this weird, people are getting used to that higher rate. Again, it's not as high as it was, but it's still not anything to write home about. And so we have some people that are like, okay, screw it, I'm getting in it, let's go. And we have multiple offers on many of the properties that are ready for the market, and even some that aren't, that are listed at the appropriate price. So it's of utmost importance that you're working with a buyer's agent to help you navigate this, because certainly this is a piece of the market or a time frame where you could definitely overpay for something that's not necessary, and you could be in bidding wars. And as you know, bidding wars are a thing in our hot markets that typically make the sellers more money. So to have that representation is super important. And if you've read anything about the commission lawsuits, some of that might be changing, but let's not go there right now. There's a ton of content on that. I did a video on it last week, and we'll continue to see where the settlements take us and the new rules, or the rules that we need to play by. So just like I said before, as the market heated up and the interest rates were dipping, people were rushing to the market. We saw a ton of, multiple offer situations. It was more, across the board in that time, because we had that huge jump in interest rates. And so, we had that huge jump in mortgage applications. And so that brought more buyers to the market, breeding competition. And now that we've seen it taper off, people are a little bit less out there. However, these little pockets, right? I heard Fort Collins yesterday. I was just in a multiple offer situation over in Murphy Creek, over in, by Buckley. And so there's a ton of different pockets throughout the area that are not necessarily the normal hotbeds, kind of on the outskirts, that are picking up steam. So it really is a hyper local thing. And this is important. As I've been saying for months and months and months, buyers respond to those interest rates. So regardless of what's going on, when those mortgage interest rates are dropping off a little bit, we see a flood to the market. When they go up, we see a little bit of people pull back. And sometimes it's the affordability piece, right? Affordability is real. As we're talking about affordability being down, when you have those high interest rates, obviously your monthly mortgage payment could be higher. And then you throw on top of that our tax situation in Colorado with those property taxes raising, coming to fruition right now, as well as your HOA issues if you're in those attached communities where those insurance premiums skyrocketed and your HOAs went up. So affordability is kind of under siege here, not to mention insurance across the board is definitely going up. I know there's some certain pockets that it's really hard to get insured for anything affordable or even insured at all on these properties that are in, fire zones and things like that. So make sure you're paying attention to that interest rate. because make sure you're paying attention to that insurance rate, because I just saw a TikTok today actually where the guy was like, my mortgage payment went up $1,500. Well, your mortgage payment, your principal and interest will not change if you're in a 30-year fixed mortgage. However, insurance and taxes do fluctuate, and that could be a massive deal. So when you're at the closing table or when you're getting ready to go to the closing table, make sure you see what those prepaid escrows are going to and understand, especially on the new build side, because they might just escrow for a little bit of piece, because that tax rate might be based on there not being a home on that land. Hopefully people aren't doing that anymore, but it's important for you to pay attention, because when that next tax bill comes at 1 or 2% of what your purchase price was, it's going to be a shock, and it's definitely going to affect that, as well as your HOA issues if you're in those attached communities where those insurance premiums skyrocketed and your HOAs went up. So affordability is kind of under siege here, not to mention insurance across the board is definitely going up. I know there's some certain pockets that it's really hard to get insured for anything affordable or even insured at all on these properties that are in fire zones and things like that. So make sure you're paying attention to that interest rate, because I heard that all of the economists are saying now they won't see interest rates in the 5s in the mortgage industry until Q4 of 2025. So that date the rate, marry the mortgage thing, you're going to be having a long-term dating relationship there. So make sure you're being smart, you're talking to the right professionals that understand the reality of the economy and how it ebbs and flows, and there is no guarantees of that lower mortgage rate coming. So, those in the 3-2-1 and the 2-1 buy downs, be prepared to pay that next level of your mortgage payment, because that's something that was kind of floated, kind of a confusing thing. Make sure you know what's coming. And if you have any questions about that, if you got into something and you want me to answer any questions, I'm more than willing to do that. I won't be too mad at you if you didn't use me as your real estate agent, and we'll go from there. So now it comes down to, what do we do with these higher rates in this market? And it really comes down to strategic thinking. This is an absolutely amazing time for first-time homebuyers to take advantage of this more flat market. Certainly there's going to be the bidding wars for that perfect house that maybe is priced below market or whatever. However, if you have a realistic approach, this is your first house, not your dream house, your second house, not your dream house, we can get creative, maybe make some, adaptations to what we're looking for, as well as your HOA issues if you're in those attached communities where those insurance premiums skyrocketed and your HOAs went up. So affordability is kind of under siege here, not to mention insurance across the board is definitely going up. I know there's some certain pockets that it's really hard to get insured for anything affordable or even insured at all on these properties that are in fire zones and things like that. So make sure you're paying attention to that interest rate, because possibly. So that's where we want to make sure that if you can afford a monthly payment at a certain rate and there's homes in that price point that work for you, maybe for the short term or the next 5 years versus your dream home, then it could be an opportune time to get into the market and quit paying rent. Because again, as I always say, when taxes go up, when insurance goes up, who pays for it? Certainly it comes across the board on the landlord's mortgage payment or the landlord's, tax bill or insurance bill, but they always pass that on to the tenants. So understand that, yeah, okay, I'm not going to get in the real estate market because I'm not going to be an owner and I don't have to deal with this. Well, it comes down to you anyways. It filters down to you as a tenant as the cost of living continues to increase in these inflationary times. So that's the biggest thing, is look at the opportunity, understand, okay, I can afford this payment, and let's go see if there is an opportunity for you to become a homeowner, because I promise you in 2 to 3 years, after you've saved $50, $60, $100,000 in rent, certainly some of that goes towards interest and all the things, but you still have an asset that you are buying down a mortgage on that could eventually be paid in full by you if you were to stay there for the long term. So strategize around this. As home sellers, talk to your agent, see, what makes sense. Do we offer a little bit of a concession? Those might be on the MLS soon. We'll see what happens with the settlement, but just strategize around that. Is it really the market price, the price you get for your home, or is it your net, right? Sellers don't often understand that, okay, yes, I'm not going to give any concessions, but if I sell a house for $600,000 with no concessions, or a house for $615,000 with a $15,000 concession, it's the same thing, right? So, or you do it the other way. If I sell a house for $600,000 with a $15,000 concession, or I sell a house for $585,000, it's absolutely the same net to the seller. Actually, the $585,000 is a little bit more because those percentages, are adjusted for your taxes and your interest and all of the things. So that's kind of what we have for you right now. It's kind of an interesting time. Hyper local focus is super important, right? There are hot spots, there are cold spots, and just taking a blanket look at the news headlines is clearly not the way to go and navigate this market. So if you have any questions, please reach out, book a call with me, a buyer consult, seller consult. I'd be happy to just have a conversation. I'm not going to bring a sign to your house the first day unless you want me to, or, shove a lender down your throat either. So let's have a conversation. What can we do to help? And let's navigate this together. I will tell you there's opportunities to be had for buyers, and there's also opportunities to be had for sellers, because it's still a low inventory, high demand market, even though we did see a decrease in mortgage applications. So hope you guys have a great one. Like, comment, subscribe, share this with somebody that needs to hear it, and we'll talk to you soon. Bye-bye.